All right, so what am I going to do? I'm going to run through our view about where the world economy is and also talk a little bit about where Australia is. Australian story is quite a complicated story. Whenever you go to Europe, you know, they look and say, okay, GDP's 3.5, unemployment's about 6, inflation's low, what are you guys worried about? And relatively, we are doing well, but it's very different according to different sectors, and the consumer in particular is quite unsettled. And so I'll try and talk you through, give you a feel for where we're at. And also, if anyone wants a copy of these slides, I think Landers and Rogers are happy to send them out to you. Okay, so big picture, and if you can't see all the slides, I'll try and talk you through the main things. Generally, we're seeing the global economy growing at around about 3.25. Now, context, the long run average is about 3.75. So it's sort of firing on about 4 out of 6 cylinders. There's been some bad weather in the US and Europe early in the year, and that's had some big impacts. Generally, though, I'm expecting that over the next 12 months, you're going to be moving back towards what you might call trend growth as some of the big economies start to recover. Just a couple of points in general. Generally, Europe is not in the headlines anymore, but it's still not great. Unemployment rates across Europe are around about 12%. You get into some of these countries like Spain and Greece, and you're up at 28%. And youth unemployment approaching 60%. So to me, yes, the euro is not going to break up, and yes, you're not going to have the problems in the periphery, but it's still doing it very, very tough. And one of the themes that comes around in Europe is how strong their currency is, because the reverse of it is the US dollar is extremely weak. And a lot of the story about Australia, when people say, well, our currency is too high, this is very common everywhere. So for me, there's still a lot of social dynamics in Europe that make me feel uncomfortable. But it's not falling anymore, I suppose, is the bottom line. But the high currency has seen the central bank recently cut their interest rates from 0.25 to 0.15, which sort of tells you how desperate they are to try and get things going. The US, I'll talk a little bit more in more detail. First quarter was basically hit really badly by bad weather. Generally, if you look through that, what you see is the US economy travelling along pretty well. Something like around about a 3% annualised growth rate. You'll get even faster in the second quarter when that comes out in about a week's time. And generally, the Fed, when it looks at the US, says, okay, I don't need this emergency stimulus anymore. Japan, a general story about there is they've had a lot of fiscal policy, a lot of monetary policy, quantitative easing, etc. But fundamentally that economy is starting to sort of slow down again. And I think one of the big problems about Japan is there's no structural reform. And so you can sort of have the sugar hit. China, it's all about the quality of the growth. And I'm going to spend a little bit more time on China because China matters a lot to Australia in terms of income effects. But my general sort of overview on China would be, don't expect it to be growing faster than 7% or 7.5% as you go forward.